Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Stocks in Focus and I am Hiral Tatia. Two companies that we're watching out for today. One is Bikaji Foods on the back of earnings as well as Aarti Industries. Let's start with the Bikaji Foods. Net sales have increased 5.5%. If you talk about gross margins, an expansion is what we've seen this time around. A decline in raw material cost was partially offset by increase in employee as well as other expenses, on the back of which, if you talk about the overall EBITDA margins, they've expanded by around 330 basis points to 14.4%. Clearly, if you see, the profitability, the profits have grown by around 47% this time around. To discuss more in terms of how the numbers have been and what's in store for the company from here on, joining us is Mr. Manoj Verma, CEO at Bikaji Foods, as well as Mr. Rishabh Jain, CFO at Bikaji Foods International. Good morning and welcome to the show, gentlemen.
Good morning and thank you very much.
Right. Firstly, Rishabh, let me come to you. Overall, have the numbers met your internal expectations?
Yeah, of course. So it was a very challenging environment, and you will see we have done a volume growth of upward of 17% in salty snacks category, which is, I think, done a reasonably good job. Our team has done. So, and from bottom line perspective, also we've done a highest ever EBITDA in last many quarters. It's upward of 14.5%. So yeah, our team has done an extremely great job for us.
Okay. Overall, clearly from a business perspective as well, when you look at the earnings, we have seen the raw material prices decline. Is that a trend that you're expected to see to continue? And secondly, employee and other expenses have gone up. If that wasn't the situation, probably the expansion in margins would have been much higher. So what's the trajectory looking like going ahead?
So basically, we'll see like raw material when we started our IPO journey. Last June quarter, our gross margin was 24% versus this year, last quarter, September quarter, our gross margin is close to 33%. So gross margin has expanded in a very well way. We have done multiple things, be it proper purchasing policy across the company at gross margin level, cost saving it at each level. Of course, yes. So from employee perspective, of course, there was small increase in gross margin that was partially due to ESOP accounting, and of course, we need to invest in people to drive the growth, to drive all the strategies what we want to implement. So that's the thing. And from other expense perspective, of course, there was significant some increase in ad cost, which was there in last quarter. But yeah, overall, it meets our expectation.
Right. So that's with regards to where the numbers are concerned. Moving on, if you see from a capacity perspective, where does the capacity utilization stand in this quarter, and what's the trajectory looking like going ahead?
So we have done a major expansion in last 2 years. Prior to this, we were only based in Bikaner, but in last 2 years, we have gone across all part of India, all in a core market like Assam, Bihar. We have set up plant in focus market like in UP, southern part of India. We have set up plant. So across, we are investing behind plant and capacity expansion. But yeah, so overall in next 2 3 years, of course, the target is to build this capacity and to come to utilize this capacity. So right now, till second quarter end, our utilization is close to 50% type of thing, and we want to take this to close to 75 80% in couple of years. That's our target.
Right. Overall, Manoj, if I have to look at the product mix as well, how is that panning out? Because clearly, from a capacity perspective, namkeen continues to be the maximum that you have as capacity. And then you have bhujia, packet sweets, which is more or less the same kind of capacity. Where is it that you're seeing traction from a product specific perspective, and what's the plan ahead?
Yeah. So if you look at the capacity expansion, what we have done is more around our namkeens and western snacks. I mean, one which is sweets, other is papad, that would continue to be serviced from our Bikaner factory only. So that's where is the traction which is going to come, both in terms of our strategy, our inputting, and in terms of business opportunity, what we see for ourselves.
Okay. And from here on, the ethnic snacks is 68 to 70% of the revenues. Packet sweets is 17%. Western snacks is 8%. So are you seeing a change in terms of the product mix going ahead, or do you think this is what more or less it will remain?
So what happens is that, the contribution of sweets goes very high in quarter 2 and quarter 3. That's because of gifting and the festive environment. So these 2 quarters are very high on sweets. But so going forward, if you look at the sweets contribution would come down and would stay around 12% only.
Okay. And from here on, from a raw material price trend perspective, how is it looking like? Because this is the highest ever quarterly EBITDA. And that is, again, I reiterate, on the back of favorable raw material prices. But taking the festive season into consideration, the inflation into consideration, how are you seeing it?
See, what happens is that, as Rishabh just spoke, during tough times, we look back, we do introspection, and you get your house in order. Uh, Last year, quarter one, when it was extremely bad and stressful for all organization, and so was it for us. I think a lot of corrective actions, a lot of, avenues we looked at, that how's that we can bring this up. Today, if you see our gross margins moving up from 24 to 23, this is not only on back of RM prices. I think there's a lot of things, just to name few, it's about the product mix. So the focus on high product margin now, and now this has got inculcated down to the sales team as well. So it's not only the finance team which is talking, or it's not only one function which is talking, it is to the core. And teams track it very closely. Purchasing, the kind of purchasing forward booking what we did this year has definitely helped us, and I think going forward we should be able to sustain for what we have delivered. With the increase in capacity utilization, because there's certain fixed costs which are sitting, now will help us further improve these numbers.
Okay. And what's the growth outlook looking like? And how is the business looking like from an export perspective?
So export certainly will be growing. It's a huge opportunity. What we were waiting for was to get our frozen plant commission, which, as we said, is all on track. By December this year, we'll have a formal commissioning of this plant. And I think next year would be the right time or year to look at these growths, or these inputting really turning into the capitalization of opportunity.
Okay. So, in terms of the current quarter, on a consolidated basis, 600 odd crores is what we've seen from a revenue perspective. Uh, 2.5 to 3,000 odd crores, can that be the trajectory that one can look at in terms of FY24?
We'll not be able to comment, but what we can say is that the quarter three has started off very well, and this was well anticipated as well, because last year it was little early Diwali, so quite a sales got shifted to quarter two, and this year it's more in quarter three. Quarter three is looking very good. Uh, I think overall from industry perspective, if you look at quarter two has not been so great. There were some headwinds, and what I hear, see, and now read the company's results has been a challenging environment. We're very glad and happy that our teams have done very well and they stretched themselves out. We delivered a 17% plus volume growth in stationery, which is commendable and by far ahead of the industry growth. Going forward, as we said, that it will be about say 17, 18 plus percentage volume growth. I think we are well on track to deliver that.
Right. My last question coming to you is either Rishabh or Manoj, what's the next milestone that the company is looking to cross?
Next milestone. So of course, see, we want to focus on direct reach. That's what our target is. Distribution. Distribution is the key. So that's where we are focusing on. That's a milestone we want to, that we want to be reach directly at least 5 lakh outlets in next 3 4 years, depend. But yeah, that's a target our team is carrying on.
Right. So that's the view coming in with regards to where Bikaji Foods goes. Thank you, gentlemen, so much for joining us on the show and sharing your views. And clearly, if you see from a stock perspective as well, if you quickly pull up the chart in terms of today's session as well, the stock is up a little over 3% as we speak. And again, from a YTD basis, since I mean, the stock is seeing gains of almost 22 to 23% coming in there. So the trajectory looks pretty strong. It's on its way to do a double-digit growth if you talk from a one-year perspective. So strong moves coming in with regards to Bikaji Foods. The other management, as we spoke about, was Aarti Industries. We did speak to the management as well of Aarti Industries. Strong moves in the last 5 trading sessions on the back of earnings. Sequential, it has been a good quarter. Let's listen in as I spoke to the management as well. Yesterday's session, a strong up move that we saw in terms of the stock price, and this was on the improved sequential performance. Investors have actually cheered the commentary as well with regards to where FY25 as a year goes. And there was some bit of a disappointment with this quarter, but that's something which everyone has overlooked. Let's actually welcome in Rajendra Gogri, CMD at Aarti Industries, to understand more. Mr. Gogri, good morning and welcome to the show.
Yeah, good morning.
Mr. Gogri, my first question coming to you is, yes, sequential, we've seen a good improvement that has come in, volume growth across several products. What's the trajectory looking like from here on? Because year on year, there has been slight disappointment, but we are seeing that upward trajectory from here now.
Yeah, we see that, effect of that inventory destocking getting, reduced in next few quarters further. So overall volume growth will continue in second half also. And we expect better performance in second half over first half.
Okay, so you mentioned about inventory restocking and demand pressures. Do you think that will persist specifically from an export market perspective in the coming quarters as well?
Yeah, it's basically a global phenomenon. So it is mainly an export market, and also we have a substantial indirect export where we sell to the domestic customer who make the finished product and sell to the export market. But this inventory destocking is a global phenomenon because mainly of a higher interest rate and tight liquidity globally.
Okay, so one of the key takeaways for me right now is that you're saying that the second half of FY24 will be better than the first half of FY24. And when do you expect normalization to happen from a business perspective?
I think a volume normalization for most of the products would happen in Q1 FY25. Maybe some agro might still continue because agro people are a little bit bearish, may continue in Q2 FY25 also. But otherwise, I think all this inventory impact and everything should get over, and we should reach to a normal demand by Q1 FY25.
Right. So, Mr. Gogri, from an export perspective, we did see the revenues dip 8% year on year, but sequentially a 27% growth that has already come in. What is the contribution to overall revenues currently from an export perspective? And over time, how much do you think will exports contribute to business?
Yeah, this quarter about 50%. So generally, we expect between 40 to 60 mix in that range of export and local. I think that's how the mix will be.
Okay. And from here on, with regards to where capacity goes, where does the utilization stand? And two, what's the capex plan going ahead?
Yeah, capacity basically is as the demand grows, it will get more and more utilized. We have just commissioned our nitrochlorobenzene plant capacity from 75 to 108,000. And FY25 will be commissioning our second ethylation block and nitrotoluene expansion. Overall capex on FY24 to FY25, whatever we have guided earlier of 2,500 to 3,000 crore, we are targeting. And this FY24, I think around 1,200 to 1,300 crores.
Okay. So the newer projects that the company will be looking at, what is the kind of asset turnaround that you're seeing, and will they be margin accretive?
Yeah, new range what we are going to put is chlorotoluene, which entire range which will have much more value-added chemistries also. So there the EBITDA margin also will be more on 25 to 30%. and asset turn will be more on lower side, about 1.2 to 1.3. So that is kind of numbers what we are looking at.
Okay. Earlier, from an EBITDA perspective, Mr. Gogri, you had guided for around 500 crores of EBITDA in terms of the second half of FY24 and around, say, 9,500 to almost a 10,000 crore EBITDA in terms of FY24 as a year. Is that something that you maintain? And even for FY25, do you still maintain guidance of around 1,700 odd crores?
Yeah, FY24, 952,000 crore what we are looking at. And FY25, 1,700 crore was our earlier guidance a year back. And we see, 5 to 15% kind of a downside possible. So between 1,450 to 1,600 crores is the kind of number what we are seeing. And I think we'll be able to crystallize more going forward.
Okay. And from a product perspective, how are you seeing the demand with regards to dyes, pigments, and polymers, and specifically the recovery with regards to agrochemicals as well? And are you seeing a shift in terms of value-added products, where the contribution from that will be higher, which will aid the profit margins for the company?
This recovery in discretionary is across the segment, dyes, pigment, and polymers. Ultimately, then it boils down to specific customers and specific products. Agrochemical, I think the decline came a little later, and I think will continue for a little longer.
Okay. And with regards to the contracts that you already have, specifically from a long-term contract perspective, where does it stand? Because we've spoken about 3 of them in the past as well. So if you could give us a status in terms of how the orders are flowing in basis the long-term contracts.
Yeah, first contract was cancelled and we got the termination fee. And that is an agrochemical intermediate, which is under pressure for, which we are going to supply to the other customers. And second contract is fine. It is running as per, expectation. And the third contract we just commissioned last year, it is on a stabilization mode and will start contributing significantly from FY25.
Okay. So, Mr. Gogri, from the first contract where you're not seeing much demand, you've already got the termination fees. Have you made any decision to shift to a new product manufacturing from the same site? Any updates on that one?
Not yet, I think we are still, looking at the possibility of making the same product.
Okay. And in the second one as well, the EBITDA per kg remains the same. It is fixed in terms of the contract value, right?
Yes.
Okay. And as you mentioned with the third contract that you will start seeing substantial contribution to come in from FY25, how much are you looking at? How much at maximum utilization? How much will this contribute?
Yeah, I think, it'll be 50 to 70 crore kind of an EBITDA numbers should be able to get from those.
Okay. Moving on from a financial perspective, the debt in terms of FY24, we're looking at around 2,700 to 2,900 odd crores. Further, in terms of capacity expansion as well, is the company expected to take on more debt? And if yes, what is that, point where it is, the company is going to be comfortable with the debt to equity ratio, and from which year will we see that taper off?
Yeah, the FY25 also will be taking more debt because we are still in a capex mode. And overall, 0.6 to 0.8 is what we are looking at as a debt equity number.
Okay. And from a competition perspective, how is the global demand looking? Are you seeing an improvement? Because inventory, as you mentioned at the beginning of the interview itself, has been one of the biggest concerns from an export market. So how are you looking at the demand scenario now?
Yeah, that demand, that inventory demand impact is slowing down. So we are seeing that demand recovery in general.
Right. My last question, Mr. Gogri, coming to you is, we've spoken about what could be the key positives, right? From a company industry specific. there might be few negatives which you will be closely monitoring so that you can act in advance. So as a company, which are those key monitorables that you are watching out for, which could change the business dynamics?
Yeah, we are in continuously engagement with the customers regarding their demand forecast and how they see the because we are B2B, and our customer then makes the finished product and put into the market of whether it's car or agrochemicals and all. So that continuous engagement is there. So if there are any surprises in there, their demand forecast, that can be one issue. Second thing is our project commissioning, which we are looking in H1 FY25 of nitrotoluene and ethylation. If there are any unforeseen delays, in that, that can have an impact. And one thing which is always a negative for India will be a Chinese currency depreciation against Indian currency.
Right. Right. So I think these are factors that I think investors will monitor as well. Thank you, Mr. Gogri, so much for joining us on the show. In fact, the stock is up almost 12 to 13% in the last 5 trading sessions, and the recovery is coming back. If you see the sequential performance, yes, year on year has been a downer, but the volumes are speaking a lot in terms of what could be in store. And the export markets probably could stabilize in the next couple of quarters as well. Thank you. Stay safe and speak to you soon again. So that's the management of Aarti Industries. That's all that we have on this session. Thanks for watching Stocks in Focus. Lots more lined up on the other side. Please stay tuned to BQ Prime.
Hi, this is Gautam Trivedi from Nepean Capital. From my team in Mumbai, I wish all of the viewers of BQ Prime a very happy Diwali and a happy New Year, and hope to see you again in the new year. Thank you.